Hi, Clayton. This is Mark in Texas. Please walk us through your strategy for purchasing properties through your company with a down payment made from low interest or zero interest credit cards. Specifically, how do you pay off the credit card in a timely manner so as to not get stuck with double digit credit card rates? Thanks a lot.
Well, that's a great question. So again, we have a link on our website. If you're interested, we work with the team from Fund&Grow. And what they do is, again, go to our website, and I think you'll get a bonus if you use our link, because they'll give you like a, I don't know, $500 off a sign up bonus to work with them. And then what they do is they will actually set up business credit cards for you personally, but in a business name. So you'll have multiple cards that they will set up for you with like 0% interest. Now these are business credit cards. They'll set up LLCs. They'll do the whole thing. Again, if you go to our website at morrisinvest.com, there's a tab for you to get funding on the top of the page. Click that and it'll kind of walk you through that process. And then what happens is you're going to have you're going to be able to use those cards across multiple multiple properties. You might get 20,000 here, 40,000 here. Depends on how much funding you'll get from these different cards. I know when I used it, between my wife and I, we had about $175,000 in 0% interest that we were able to use and disperse. And the way that we used it was strategic. So to answer Mark's question, I didn't just buy properties outright using my credit card. Now, there's nothing wrong with that, but you have to be smart about it and know how you're going to pay it back. Like, this isn't free money, right? You've got to have a strategy. And one of the strategies, of course, is to be able to buy additional properties and then use the tax benefits or the offsetting of other assets to be able to pay that back, or have other means or other funding, longer term funding in place that you can put in for the next 20 years or next 30 years, converting that. Now, the way that I used it was for down payments. So let's talk about one of our properties, right? If one of our properties at Morris Invest is the down payment is usually going to be around $45,000 to $55,000, right? So that's the down payment. And then we work with over 100 different lenders to fund the remaining amount. Okay, so if we have that funded separately, then you really are going to be focused on the down payment amount at 0% interest. So then how can you strategically work to use the cash flow from that rental property to pay back that down payment, that $55,000 in a year or 2 years? That's very doable. Now, the beauty of these zero interest credit cards is a lot of them will be 12 months to even 18 months. So you're getting that 0% interest for 12, even 18 months. And then what you can do is the team will help you roll that into an additional 0% interest account. So you could be doing this. I've done this for a couple of years where you're paying 0%, where you're able to roll some of that continually forward, but you have to stay on top of it. You can't fall asleep at the wheel, Mark. You can't just forget about it, because then, yes, if you're not paying attention, you can be very stupid about it and suddenly it jumps up to 18%, right? You don't want that. We do not want that. So we want to be in that 0% interest. We want to be using it. And then what we can do is roll that balance to other accounts, other 0% interest cards. Now, let's say you've got 4 cards that they set you up with. Maybe you don't use all 4 of them, right? You use 2 of them. And they start when you actually start using them. You actually start using them for the first time. So you can roll them over to the other 2, not going all at once in 100% of your funding options. So you just need to be strategic about it, Mark. That's what we did. We used it for down payments, and then we used lenders for the balance of our loans, okay? And then using the cash flow from your tenant in your property and the time that it'll take to pay it back, you should be able to have those things paid off without ever having to hit that 18%. But also think about this at the end of the day, Mark. It's not the worst thing in the world. Remember, Robert Kiyosaki bought his first rental property using a credit card. It's not the worst thing in the world, actually, again, our properties have a minimum 18% internal rate of return. So even if it jumps up to 18%, right, you're still it's not the worst thing in the world. We don't want you to do that. And I'm not a financial advisor. I'm not telling you to do this, but you would still basically be breaking even on the math, right? 18% interest and 18% return. And then you're getting the tax benefits on top of that that are offsetting that. So I know it's not ideal, but again, it's not the worst thing in the world. So you just got to be creative and think strategically about it. Really map it out. Sit down at your computer, really map out how you're going to do this, okay? When you get that funding, have a plan. Make sure you have a plan in place so you don't get screwed by suddenly seeing high interest jumping up on your credit cards. And I say 18%. Some of them can be 22%, so just be careful with that. So thank you for that question. Thank you for all of your questions today on the show. You can go to our website at morrisinvest.com, click on the microphone icon and leave us a voicemail question, and we will attempt to answer it here on the show. Much love to all of you. Now go out there, take action, and become a real estate investor. I believe it's the #1 way to build wealth, preserve wealth in this crazy inflationary environment. We'll see you next time, everyone.